Hello friends, we keep on investing in different forms of instruments. Gold is one such form of instrument. And friends, while making a decision of investment in the gold, we often find some way other than investing in physical gold. Because investment in physical gold carries the risk, isn't it? The risk is of safety, losing the gold, theft, and hence we try to find out some other way of investment in the gold. Not in physical form, but maybe in demat form, in paper form. And one such way of making the investment is in the form of sovereign gold bonds. Well friends, the word sovereign indicates that these are the bonds which are issued by the government. So government issues these bonds, rather RBI issues these bonds on behalf of the government. These are known as gold bonds. So these bonds are denominated in the form of some quantity of gold measured in terms of grams. So it may be 1 gram bonds or 10 grams bonds, like that. So you can buy this bond by paying the amount for the specified grams of gold. So you get a bond, say if it is of 5 grams, then you are entitled to get 5 grams of gold on maturity. This is the way in which you can invest in gold bonds. These bonds carry the interest also. The rate of interest is 2.5% at present. So you are eligible to get the same quantity of gold on maturity, and during the period of maturity you keep on getting interest also 6 monthly. The period is of 8 years. So one may think that for 8 years your money is blocked and you don't have any liquidity. But that is not so. These bonds are prematurely encashable after 5 years. Similarly, these bonds are listed on exchanges so that one can sell them or buy them on the market any time. These are some of the benefits. Similarly, these bonds can be offered as collateral security and you can get loan on these bonds. Similarly, though the interest on these bonds is taxable, whatever you get on maturity on sale of these bonds, well, that is totally tax-free. Capital gains are tax-free. Indexation benefit is also available. Considering all these benefits, people, the investors, have found these gold bonds an attractive way of investment. It eliminates the risk and cost associated with storage of physical gold. Similarly, the investors are guaranteed the market value of gold at the time of maturity. We get periodic interest also. There are no making charges. There is no issue of purity of gold. The investors do not suffer the losses in terms of units of gold because they get back the same quantity of gold. Considering all these benefits, the sovereign gold bonds have become very popular for the investors. So far, This scheme was started in November 2015, and so far there have been 67 tranches of sovereign gold bonds. That is, the government has issued these bonds 67 times at the intervals, and the total amount collected by the government is more than 72,000 crores of rupees from the market. But now 4 tranches have become, or they have come to the maturity, and the government has repaid for these 4 tranches. If we now consider and look back to what has happened about these 4 tranches, we find that investors are benefited a lot. The price of gold has gone up to the extent of price has gone up double, and therefore the returns to the investors are about 9 to 11% on maturity, over and above 2.5% interest that was committed and paid by the government. So government's cost for collecting money under sovereign gold bonds is very high, 9 to 11% per annum plus 2.5% interest paid. Furthermore, the government has sacrificed on capital gain tax also. Why for these bonds were issued by the government? The purpose was very simple. This is an option for physical buying of gold. So it was expected that investors, instead of buying the physical golds, will invest in these bonds and gain so many benefits. This will help reduce the imports of gold, because when we import the gold, we have to give the foreign currency, and foreign currency is a very precious thing for the government. But the result is not as expected. Imports have not gone down. The imports are as high as they were earlier. Hence, the purpose of issuing the sovereign gold bonds is not served. Secondly, the government was thinking that if they borrow on the basis of these sovereign gold bonds, the interest cost will be less and it will be 2.5% only. But that is not the case again. Government has paid interest and also is required to pay the appreciation in the value of gold. So the government borrowing is at a very high rate of interest. Hence the government is thinking of these gold bonds again. One step has been taken by the government now, and that is in this budget of 2024. It has reduced the import duty on gold from 15% to 6%. Expectation is that if the import duty is reduced, well, imports of gold will be cheaper, and hence the prices of gold in the market will come down. But even before this announcement was made in the budget, people have started shifting to sovereign gold bonds because they have experienced that the returns on gold bond is very high. Considering all this, the cost of borrowing to the government and no reduction in the imports of gold, now the government is thinking of discontinuing sovereign gold bonds. There is no official announcement made yet by the government, but it is expected, it is foreseen that government probably will discontinue issuing further tranches of gold bonds, considering the past experience, considering the heavy cost that the government has to pay on these sovereign gold bonds. Friends, beware and think about sovereign gold bonds investments from this angle.